Hello, my name is Sergio Marrero, and thank you for joining us tonight for Rebel One Live. We have a special guest, Hamet. He is the founder, managing partner at ShareVC. He's a serial entrepreneur and investor, co-founded MoviePass, chairman of BeLife that was acquired by Canary Health, and good friend I've known for a while in the startup studio space. So thank you for joining us, Hamet.
Thank you for having me.
Yeah, absolutely. So for those that don't know about you, can you share more about what you can about ShareVC? I know there's to be announced, but what if you could share a little bit more about what you're working on to give people a teaser.
Share Ventures is a venture studio. We're focused on human performance, which for us means technologies, products, and services that will improve the way we live and work in the future. So very apropos, given what we're dealing with right now. But also just born out of a passion. Everyone on the team is excited about the future of how we're going to live and how we're going to work, and really optimistic in general about that as well, and excited about technologies and products that we can build for that world.
Great. And I know you're touching on it a little slightly. Can you share more about how it's different than a normal fund?
Yeah, well, and you're asking me this question, but so I don't know if your audience knows as much about your how we met, but you and I met when you were at HBS, finishing your HBS program, and you were doing sort of research on the venture studio space, as was I. So that's, I think, how we found each other. I really took it. I took it as a project and an opportunity to think about what the future of venture capital might look like, and what the future of entrepreneurship and founding companies might look like. And that very quickly pushed me into studying the venture studio world, which I was very grateful to meet you in that process. And you had done a lot of great work on really researching what people have done in the venture studio world, which varies greatly, as you know. And so I really got excited after spending some time with the folks at Google and Idea Lab, Bill Gross, who's kind of the godfather of this space, and many others, the folks at Science and Pioneer Square Labs and High Alpha. And I got really excited about just a fresh way of thinking about venture capital, a fresh way of thinking about starting a company. We know the failure rates are too high in both venture capital and as a startup entrepreneur. What are ways we can use data to shave that down? How can we take processes and lessons learned and apply those to companies again and again and again? And so I did that broad survey of the landscape, including talking to people like you who had done their own broad surveys of the landscape, and came to the realization that there was a way that was better for me. I'm kind of more of a founder than I am an investor anyway. And it felt like the timing was right. It felt like the industry was right. This whole human performance space, in my view, is still fairly nascent. We're in the early days of what's possible there. So there are probably more companies to start in that space than there are companies to invest in that space. So that's what got me here. But you knew that.
No, awesome. Thank you for sharing with the audience. No, for those that don't know, is the startup studio model. I always say is because a fund invests in startups, and the startup studio model is a birthing startup. So it's a startup factory, I like to say. Just for those that don't know, but that is a
I did all that talking and they didn't answer your question. I apologize.
No, that was good. Yeah, so I no, you did answer it. It's I want to dive into your background and why and how you're uniquely posed to do this, because this isn't a simple thing to start at having studied it and looked at it. So if you can share a little bit more about your founder journey. You've started multiple companies, and then to now, if you can share that.
Yeah, I would say that both my founder journey and my venture capital journey contributed to why I felt so excited and compelled to doing something in this space. The founder journey is like the process. I don't know, there are probably other founders out there that have the same thing, but like in the early days, you're so obsessed with like finding product market fit, or you're obsessed with finding a foothold towards product market fit, that you can then use to communicate to investors to help you raise capital to then help you get product market fit. And so much of that energy is focused on that. And I just felt like, for me, especially after I, in some cases, got to a place where I felt like we'd been able to raise the capital, we'd been able to start to build the team, I would oftentimes get flooded with even more ideas. And as a founder, it's not prudent to, at least it's certainly frowned upon to start one thing and then start another thing right before you finish the first thing, right? But I did get excited about the learnings I would have when I would work on one startup and how they might apply to another. And really, that is a framework that venture capitalists get to realize all the time. So the challenge for me as a founder was, like, I didn't feel like I just wanted to do something for the next 7 years. Like, when I think about the next company I started, I want to do it for the next 7 years only, unless it was a company to create other companies. And so that's what got me to that place. I saw some bugs in the startup entrepreneurial world, and I saw some bugs, if you will, in the venture capital world, right? The bugs on the startup side are you don't have any diversification. So what happens if you started a SaaS business focused on restaurants or cruise ships? You're pretty much screwed, right? You don't have that diversification challenge, but you do have the ability to have huge upside if you're successful, to have huge impact on what you're doing, to have huge impact on the mission and the direction of the company you're going. So those are very exciting features. On the venture capital side, you have some bugs as well, and you have some great features. The bugs are, you don't really go deep, right? You don't really have the ability to control the culture and the vision and the direction in the way that you would if you're an entrepreneur. But you do have these great features like diversification and the ability to, in some ways, scale by having ownership in lots of different companies. And so this venture studio model, in many ways, felt like it took the features, the best features of both, and put them in something new.
That's great. That's great. Double clicking on your background, how did you end up? I know you started a series of startups. One was Next Media, and the other one was MoviePass, and then BeLife. Can you share a little bit more about that founder journey? Were you always a founder, or what tipped the scales for you, and how did you end up starting so many companies?
Yeah, I mean, I have always been a founder. I was that kid that had the grass cutting business, and I had a business in college, and I'm old enough that it wasn't super common that college kids were starting businesses. Now every college kid starts a business, but when I was in school, it really wasn't the case. So yes, I've always had that DNA. I think generally what happens is I'll see something and I'll say, why isn't someone doing X, Y, or Z? And it starts off as a little frustration or something, or like an itch. You got to scratch the itch every once in a while, build a deck or an outline, and then eventually it gets painful. And like, I just got to do this. It's beyond an itch. I want to build this product. I want to see it in the market. I want to solve this problem. I want to build this culture. And that's been a little bit of my psychology, but I think I'm just wired like that. My mom said I was always super curious about everything. I was one of those kids. And I think this is how I'm getting to express that.
I love it. And what caused you to shift? Was Upfront Ventures the first shift into venture capital for you?
No, actually, when I first got started, I worked in a boutique investment banking firm where I was helping emerging technology companies do financing. This was right out of school. So I got introduced to venture capital and company building pretty early. And pretty early, I realized I didn't really want to be an agent. And so from there, I actually went into a venture capital firm that was focused on investing in sub-Saharan Africa.
Yep.
So along with a bunch of other young folks, we raised $120 million to invest in companies in sub-Saharan Africa. And so that's where I got my first taste of venture capital, albeit on the continent, which is a very different landscape and different psychology I think you had to have to go into that. But I got a taste there as a young guy and realized that I wanted to be way closer to the action. And so that's what triggered my first entrepreneurial venture, which was Next Medium. But I've kind of gone back and forth. So after Next Medium, I became an EIR at True Ventures, where I spent some time with them while I was ideating my next thing and also helping them look at deals. I started BeLife and MoviePass while I was at True Ventures as an EIR. And after we had done a couple of financings for both of those businesses, was lucky enough to join the guys over at what was called GRP at the time. Now it's called Upfront Ventures, and spent time there as a venture partner and now a board partner.
And what I imagine, well, I want to start back at the New Africa Opportunity Fund, what in terms of investing internationally and just a flavor, what types of things were different about investing on the continent, especially with that size a fund and that amount of capital?
Well, at that time, and this was 97, 98, 99, 2000, that time frame. This was right after apartheid. So it was we were like the first US backed fund investing in South Africa after apartheid. So it was a very, very different time, but you felt like there was opportunity everywhere, but huge uncertainty in lots of places as well. Uncertainty around the public markets or any liquidity, uncertainty around the entrepreneurial talent there, uncertainty around the ecosystems, but just need and lots of problems that needed solving and that could be solved. And so that was what fueled the interest for a fairly young team to go out and raise this money. And you know, the most successful investment that we made was actually the largest wireless operator in sub-Saharan Africa, which ended up selling for over $1 billion and being very successful. And I think the lesson learned there was like the biggest opportunity was to look at leapfrog technologies, where technologies or products and services actually have a better shot at getting some traction when that problem was super intense and the old way was more expensive. The old way being landlines would have been way too expensive in the sub-Saharan African markets that we were looking at. And so a wireless operator was able to get a hold and win the market.
That's great. No, thanks for giving that insight.
Yeah.
So I wanted people to see your there's a lot of movement, but a lot of innovation, right? You followed the opportunity, which led you to here. And then joining the Upfront team, what were in your mind, like, had you why did you make that move? Was it you waiting for the next opportunity, or did you just want to stay in a fund forever? Like why did you shift back between entrepreneurship and VC and then back to entrepreneurship?
You know what? I felt I'd known the people at the team at GRP, Mark Suster and Yves Cicerone and several others for a while, just being in the LA ecosystem, and liked them, and saw a very clear mission to what's the right word, to really make LA venture capital a thing, and to put it much more on the map than it was at that time. And I had two very, very capable co-founders in both of the businesses that I had started, which, important to note, I started two companies at the same time, kind of cuckoo, but was a co-founder with a guy named Paul Campbell in BeLife, who was also a serial entrepreneur, had some successes in the past, and then also with Stacy Spikes in MoviePass. And so I took an executive chairman role in both of those, and they were full-time CEOs, and I joined Upfront while spending time on both. So I think I was in my mind a little bit almost doing a venture studio before I was actually doing a venture studio. But I think it was just really compelling to work with a great team at Upfront in a very early stage environment for LA venture capital. You could almost see it starting to emerge. This was really before Tinder, before Snapchat, before a lot of these folks now, really enabled the ecosystem to be truly on the map. And at the time, Upfront was one of three venture firms, or GRP was one of three venture firms that were really active, that had meaningful funds. Now there are many, many more. Yep. But I think the chance to work with that great team and to see some of these new companies emerging. We got a chance to invest in companies like Ring that really transformed, their whole space, but also a lot of the hardware ecosystem in LA. So that experience was a great one to have.
And that's great. Especially going back, what you were saying before about being almost working on a venture studio before you knew it was a venture studio. And I compare it like the EIR model sometimes is that, where an entrepreneur comes, they're tinkering and they're going to start, and the VCs are watching to invest as a hub, what is it, precursor to Share. Can you share a little bit more about like what's different about your model of what you can share?
Yeah. So yeah, Share Ventures. So as I studied the other players in the market, the other venture studios, I found a few things that I thought were interesting, and I also saw some things that I think many of them were challenged with that I was trying to address. And I think the big thing is, how we use data and thinking about the company building process, and the tools and teams that we're building to really understand that innovation funnel in a way that we think is unique and will allow us to spot. Oh, cool! Allow us to spot opportunities for new companies that can be venture scale in a unique way. So I think that's a big part of it. I think the other part is we are a focused venture studio, so we're not in every space. We're focused on what we call human performance, as I explained earlier. And so I think those are the two big things that are very, very different. Using technologies and tools in our process in a very integrated way, not shooting from the hip, using data wherever possible. And then being very focused on this human performance space, which has only become more relevant since this pandemic that we're living through now. And so the ecosystems that we're building to enable that with neuroscientists, behavioral scientists, we have a partnership, which I won't mention, with a very big organization that also is a good source of deep tech inspiration and deep tech R&D. And so that's I think the big thing. But look, I say this all the time. I think you and I talked about this before. The model can be what the model is, right? It's just like you would say, is the studio model good, or is the venture capital model good, or is the startup model good?
Yep.
Well, depends on the case, right? It really does depend on what the ideas are, who the people are. And so we are really focused on making sure we've got a great model, but then really making sure that we've got the best possible people, and that we've got an incredible framework and machine and IP that we're developing to make ourselves, better and better at doing this.
That's great. Yeah, exactly that. That's one of the things I saw in the venture studio research, is it depends deeply on the talent and what you can execute. You can come up with different models in your mind, but every team was unique and really doubling down on superpower. And I could see you have the rapid launching superpower. Speaking of venture, what are some of the challenges? I know you're innovating in venture, and you mentioned some of the challenges. Where do you see the startup studio model of rapidly starting new ventures? Do you see it taking off? How have you seen it evolve in the last couple of years, and where do you see it going?
That is a very good question. I would say that yes, I do see it as a new asset class of sorts. I think I've been encouraged, as we've talked to limited partners about their curiosity around this model, and their, I think, increasing interest in the model, because some of the trends in traditional venture capital are concerning to them. They're probably in many ways, some of the trends are going to be reversed in dealing what we're dealing with now. But the big one was valuation upticks. But the other one that I'm not so sure is changing yet is the ownership And when I talked to LPs and they said they were comparing private equity to venture capital, many of them were leaning much more aggressively to private equity funds because they felt like they were more excited about the ownership and control that the managers had, and they felt like overall the risk reward was better in the private equity model. And so I do think that to some extent the venture studio starts to address some of those concerns. We are giving birth, we are starting these companies, we are identifying the space through our own research, doing incredible amounts of ideation, coming up with as many ideas as possible, but then testing and validating and moving ones that are not working to the side, and focusing most of our energy and resources on the ventures and the opportunities that we're most excited about from a traction standpoint. So I think that begins to become very interesting to the limited partner, and as the limited partner community starts to understand this more and the asset class gets more clearly defined, you'll see it really grow up and more activity in the space. But again, I think not all venture studios are created equal. I think it's kind of like there were people that say, "Oh, venture studios don't work." That's kind of like saying venture capital doesn't work, or that's kind of like saying startups don't work. Some do, some don't. Again, I think what we're seeing is more sophistication. I think version 1 of the venture studio was like the rocket internet model to some extent, where it's really about finding a model that worked somewhere else, copying it, and taking it to another geography and just carbon copying it. I think the venture model of today, the venture studio model of today, is more about thinking about big trends, but also thinking about new opportunities for innovation and new chances to get signal on demand and other really important sort of data points related to whether the opportunity is exciting or not, and then going in on that basis with something that's innovative and differentiated, and being able to leverage all the wonderful tools we have now to discover what differentiation and what innovation is really going to resonate with the market.
And I know when we spoke a while ago, part of the challenge in this model as you rapidly create ventures is getting great talent to take it and run with it afterwards. How do you all address some of those challenges of getting unique talent to lead the ventures you've launched?
Yeah, I would say in 2 ways. Well, the first way is one word, and that's alignment. And alignment can mean a lot, but I found that passion alignment is the thing that we are focused on the most. And so disproportionately, we are able to find individuals that have incredible operational experience, have incredible integrity, and they've proven that and track record. They have great relationships and network. They have deep passions in a particular domain, but they may not have 2 additional things that a traditional founder or traditional CEO, not necessarily always a founder, has, which is risk tolerance and the idea. We found a lot more people that have, of those 6 things, they have 4 of the 6.
Yep.
Right? The integrity, the operational experience, the network, and the passion. But they don't have those other 2 things. And that's okay, yes. By the way. In fact, there's a huge unlock in addressing people that don't have those 2 things, that may sit on the sidelines when it comes to an entrepreneurial opportunity, or or sit on the sidelines when it comes to any innovation company opportunity. And so, by the way, disproportionately, those folks can look like you and I, underrepresented groups. And the risk tolerance is in some cases different for a lot of different reasons. So that's where we tend to focus on folks that in some ways want their cake and eat it too. It's not like if they go and do it the old fashioned way and sit in a garage for a couple years and eat ramen and then come up with something that may or may not work. Certainly they would and they go to a normal venture capital firm and get funded, then that they have way more equity than if they joined us in a studio. But they still have incredible equity opportunity if they join us early in companies. But we also have capital. So, as we're starting these companies, we're obviously funding them, but we're bringing on outside capital. We're collaborating with, great venture firms. Our investor base includes a list of really, really great venture firms as well. So they become part of an ecosystem that I think can serve them in the short and long term.
I feel it reminds me also, as you said, with Idea Labs, Bill Gross, BetaWorks in New York, like creating that ecosystem, and have people that you've de-risked it for them. You made it a little bit easier. They could go shopping for a venture they want to lead, rather than thinking of an idea and then iterating and then going to get money. You've knocked some things off the list, which is great.
Yeah, and I will add one very important point, and is part of our strategy that I think is somewhat unique. It's not that we're trying to actually find candidates that are better. They have so much other opportunity. They may have a great job. They may have plenty of comfort, but that passion they might not be scratching that passion itch the way they want. And because they don't have the idea necessarily that maps to that passion, or they don't have that early risk tolerance, because they don't have to take that risk tolerance. They do the math and like, well, I'm at a great job. I don't need to. So I say that to say we're doing that work on the earliest phases to de-risk, and hopefully that serves us and our investors well as well, because we're going to get better candidates. I think there is a perception in some models that anyone that you would bring into a studio company, they can't have what it takes. And I think that can be the case, right? Especially if you're bringing in executive talent super early and you don't have much. But if you put a lot of meat on the bones, and you've de-risked the business, you built a beautiful brand, you've identified capital, or you've put in capital, and there's a clear line of sight on product market fit, then you're doing a CEO search, and you're just finding someone that has an incredible ability to evaluate a deal. And they're saying, yes, I want that. I want to be part of that. And that's really more of our orientation. So I want to make that statement, because I think it's an important distinction. And I think important for the success of our model and for the success of the companies, that we're actually getting people that, are better.
That's great. That's and if you, how did you go from? I know, looking at your background, right? You've spent there's finance component, but also in the media space was a bit of focus, and then now you're focused on this human performance. How did you pick that as the focus of the startup studio? And to give people listening a little bit of background, startup studios that focus tend to do better. Which is
cool. I didn't know that.
Yeah. So it's either on model, right? On the model you're replicating, or the or just industry of focus. Same as a VC, right? You start to build like context, knowledge, and expertise in the ecosystem. So when a new leader comes in. So how did you pick that area?
I just can't think of any other area I get more passionate about. Is
Awesome.
The honest answer. I think I got really obsessed with understanding consumer psychology in my first company, which, you're right, was a media company. We were actually focused on product placement, advertising. So understanding the value that a brand in a video a brand being shown in a video had to that individual brand, and just really got me real curious about understanding in the neuroscience of the consumer. And so I ended up building some great relationships with some neuroscientists, and starting to just hack around with them on what was happening in that world, and what innovation was happening in the world of neuroscience and behavior change. And that kind of merged with a concept around, well, what if we could, use this consumer psychology or this neuroscience creativity these neuroscience principles or behavior change principles and apply them to really great behaviors, healthy behaviors, to solve some real problems. What could we do with that? And so that opportunity or that problem set got really interesting to me, to apply some of the behavior change principles I'd learned and some of the consumer psychology I'd learned, and I felt like I had some natural superpowers in, and apply them to things like sleep, diet, nutrition, fulfillment and purpose at work, longevity, all these things that we fit under the human performance banner, the future of entrepreneurship, micro entrepreneurship, reimagining ownership. Just got very excited about those categories.
That's great. It especially in the era of, was I call it the superhuman. How do we all the things that can amplify human potential. Shifting a little bit to the current situation. Don't want to skip it because we'd be missing what's going on with everything going on with the pandemic. What challenges are you seeing in launching the fund, getting things moving? I know there may be some, obvious things like things are slower and resource constraint, but are there any other aspects that you're seeing that may be unique?
Well, I mean, I definitely feel a sense of gratitude that we were able to close on capital before this crisis, because it's obviously very hard to raise money in general, but even harder when you can't meet the person. There's huge uncertainty, all the things that we all know about. So that's, I think, part of it. I think the other part is we've been very thoughtful around where we're going to spend our energy. And so, we have our roster of ventures, and some of them are more COVID resistant or more appropriate for this world than others. And so we've refocused our energy into the ones that we know are extremely appropriate for this new world that we're living in. And then as part of our own innovation process and funnel, making sure that we're thinking about what big problems are now popping up that need solving, that might present great market opportunities for us to do businesses in or build businesses in. So there's that. And then the practical realities also is making sure that we're being thoughtful around our companies and how much time it may take for them to secure outside capital as they move to the next stage of their evolution. And so that's both making sure that we've thought about how much we have to be able to be there with our own capital to support our own companies, or making sure that we're finding businesses that we think can get to some sort of milestone, financial metric, sustainability, profitability sooner rather than later. We also have a few partnerships that help us think about how we could mitigate those risks using some less traditional sources of funding as well. And so that's part of our calculus now has to be to include the less traditional sources of funding, grants and strategic partnerships and things like that. And then good old fashioned revenue and cash flows, right? Being thoughtful around making sure some of our businesses have that orientation.
That's what I say. Best investor is your customer. If we're gonna
exactly
shift for you, we spoke a little bit about one of our themes also is around impact, is elevating underrepresented founders and investors, so whether that be women or communities of color. Can you share a little bit more about as a this is the way I think about it. It's like you've started several companies, you've done been successful. Of course, somebody's gonna back Hamet. Like I got So what advice do you have for other other underrepresented investors that are entering the space, especially in this time? What would you advise as they're starting their journey?
Underrepresented investors that have capital or are needing to raise capital, or
I would say maybe they aspire to either break into VC or eventually start their own fund. Okay. And assuming that on average maybe they don't have capital, or or maybe that's a step, right? Maybe they work and they angel invest, but what would you recommend as they're entering the entrepreneurial space? I know I'm like you, I default to building and starting something, would be my advice, but not everyone's built of that cloth. So if you have any other insight for those that are making the journey.
That are wanting to go into let's call it the venture ecosystem. So that could be as a venture, they're a venture guy within a firm, or doing their own venture firm, or becoming an entrepreneur. I definitely, like, I felt when I was a venture guy early in my career, I felt an imposter syndrome because I hadn't started a venture-backed company. Like I didn't have the reference points that I felt like I should have. Like I feel like being a venture person is like for someone that's older that has more of that experience. So I felt so much better after I had started a company and gone through the ups and downs and understood the psychology. And now you feel like I can almost feel like I can look into an entrepreneur's eyes and see, like, oh gosh, you got someone on your team that's not working out. I can feel it. And whatever it is, like it just, you start to feel things differently. So I definitely think if someone wants to go into the venture business, it is so helpful to just have started a company, to have sat in those shoes and try something, to understand that risk, to feel that risk. It's hard to do it if you haven't felt it before. I think I would say this, a big but, because I'm not one of those that says the only way you can do this is if you've done, your own company. There are so many investors out there that have never done their own companies. They've got the cycles and the reps around investing. And so I think that's the other way to do it, is just to get as immersed as you possibly can in however you can get in. If you can raise a fund, go raise a fund and start putting it to work. If you can join a firm, a great firm, get in there, find a mentor, work closely with that mentor, put some money to work. If you can't do that, you join a small firm that's trying to raise money and find a mentor and help them raise money and carry their bag and do whatever they need to do to help them raise money to be successful, to get to a place where you can then put money in companies and go to work. If you can't do that, then go on Angel List and find someone that is trying to build a syndicate and offer them the same thing. If you can't do that, try to do your own syndicate and try to get involved and try to put $1,000 to work in someone else's syndicate and just put to work and put in the cycles with the entrepreneurs. If you can't do that, then just call entrepreneurs and say you want to help them and you want to help them think about the market. You want to help them think. There's always a way to get in. Certainly the one end of that extreme is way more difficult, but if you can do that, then great. But there's always a way to get in. I'm biased because it's been my path. I do think it's very valuable and useful to sit in the shoes of an entrepreneur, try it yourself. But certainly very, very next to that is getting in bed with another entrepreneur, helping them get their dreams realized, making it part of your dream, understanding that process of raising capital and building culture and finding product market fit and all those valuable lessons. And then that's just going to open up more doors, in other areas.
Awesome. Well, on that note, I think that was a great close. So I want to say thank you, Hamet, who is the founder of Share Ventures. Thanks for joining us today. And for those watching, this is Rebel One Live, where we're covering impact investors and founders. So thanks again for watching, and tune in next every Tuesday to Thursday at 7 p.m. Accelerating impact investors and founders. So thanks, Hamet. Appreciate it.
Thanks, Sergio. Appreciate you. Take care.